Hi everyone, I'm Andy and this is the AI Breakdown. Welcome to your weekly news edition, where I'll cover what happened in AI last week and why it matters. Let's start with some big numbers. On the 31st of March, OpenAI closed a $122 billion funding round at an $852 billion post-money valuation. That is the largest private funding round ever, and the first to clear the $100 billion mark. Amazon put in $50 billion, while SoftBank and Nvidia each committed $30 billion. And even that headline figure has strings attached. Amazon's bigger tranche depends on OpenAI either going public or hitting an AGI milestone, and SoftBank's piece is backed by a 12-month unsecured bridge loan. TechCrunch also reported that OpenAI pulled in $3 billion from individual investors through bank channels. That makes this feel a bit less like classic private fundraising and a bit more like early IPO prep. The general feel is OpenAI is targeting an IPO in late 2026, likely in the October to December window. So this isn't just a giant pile of cash landing gently on the balance sheet, it's capital with a stopwatch attached. Now, the other numbers are just as telling. OpenAI says it's now at $2 billion in monthly revenue, up from $1.3 billion at the end of 2025. ChatGPT has 900 million weekly active users and more than 50 million paid subscribers. Enterprise is already more than 40% of revenue and could match consumer by the end of the year. Yet the company still doesn't expect to be profitable until 2030 at the earliest. One reason the valuation feels so extreme is that, according to the briefing, it already puts OpenAI above Goldman Sachs, Ford and Uber combined. That tells you what this round really is. This isn't investors rewarding a clean business, it's investors forcing the pace in a winner-take-most race. OpenAI has basically taken on public company pressure before actually going public, because in AI right now, scale is being treated as survival. Next up, and continuing our coverage of Anthropic versus the Pentagon, in last week's episode we covered Anthropic's injunction win against the Pentagon. Well, the next move came fast. On the 2nd of April, the US Department of Justice appealed to the Ninth Circuit. It's challenging Judge Rita Lynn's 26th of March ruling that blocked the Pentagon's supply chain risk designation against Anthropic. The injunction still stands for now, so Anthropic's commercial relationships stay protected while this plays out. But the appeal matters because it moves the case from a dramatic lower court ruling into the stage that can actually shape precedent. To me, this is the first real test of whether AI companies get to draw ethical red lines once government contracts are on the table. If Anthropic wins on appeal, that becomes a shield. If it loses, responsible use language starts looking a lot more optional the moment federal money shows up. Judge Lynn had called the government's move classic illegal First Amendment retaliation and said it was arbitrary and capricious under administrative law. The DOJ is expected to argue the opposite, that national security concerns and the supply chain risk statute give the executive branch broad room to act. The Ninth Circuit has given the DOJ until the 30th of April to file its opening brief. If the appeal succeeds, the government gets more leverage in AI procurement disputes. If it fails, AI companies gain a much stronger legal footing to insist on responsible use limits without fearing punishment for it. And staying with Anthropic, this next story landed in the last couple of weeks, and it's worth unpacking properly. A configuration error in Anthropic's content management system left around 3,000 unpublished internal documents in a publicly searchable data store. Security researchers Roy Paz of Layer Security and Alexandre Pauwels at the University of Cambridge found the exposure. Fortune reviewed the materials and reported on them. Among the files was a draft blog post describing an unreleased model called Claude Mythos. Anthropic confirmed the model exists. A spokesperson called it a step change in capabilities and the most capable they've built to date. They said it's currently with a small group of early access customers. In those leaked documents, Anthropic introduces something called Capybara, a new model tier. And Capybara and Mythos appear to refer to the same underlying model. Capybara is bigger and more capable than Opus, which was previously their most powerful line. So we're talking about a fourth tier sitting above Haiku, Sonnet and Opus, and it's expensive. The draft acknowledged it's very expensive to serve and won't be generally available until they bring costs down. But the real headline is the cyber angle. Anthropic's own draft language says this model poses unprecedented cybersecurity risks. It describes Mythos as currently far ahead of any other AI model in cyber capabilities. The concern isn't that it can spot a bug or suggest a patch. It's that it can find vulnerabilities and develop working exploits at a speed that outpaces defenders. Anthropic's own words, it presages an upcoming wave of models that can exploit vulnerabilities in ways that far outpace the efforts of defenders. And their response to that risk is telling. The early access rollout is specifically aimed at cyber defenders. The idea is to give security teams a head start to harden their code bases before these capabilities go wide. According to Axios, Anthropic is also privately briefing government officials on the risks. To add a layer of irony, just days after the Mythos leak, Anthropic accidentally shipped the entire source code for Claude Code to NPM. That's roughly 500,000 lines of code across nearly 2,000 files. Another human error. 2 major leaks in 1 week from the company that positions itself as the safety-first AI lab. That's not a great look. The market noticed. Cybersecurity software stocks dropped after the Mythos news broke, with the iShares Expanded Tech Software ETF falling nearly 3%. My take is security teams should treat this as an early warning, and not just about Mythos specifically. Cato Network's founder, Shlomo Kramer, put it bluntly to CNN, saying that behind Mythos is the next OpenAI model, the next Gemini, and a few months behind them, the open-source Chinese models. Every lab's next generation will raise the same risks. Palo Alto Network CEO Nikesh Arora warned that AI-powered attacks could go from breach to data theft in 25 minutes, while most organizations take days to detect intrusions. If your defense plan still assumes the attacker is moving at human speed, you're already behind. The next year is going to favor companies that automate defense as aggressively as attackers automate offense. Before we go further, a quick word from our sponsor. This episode is sponsored by Notify Technology, a health and safety software partner, helping teams run incident management, audits and inspections, and risk assessments in one place. And with Notify Spark, their AI companion, they're streamlining incident reporting and investigations, saving time, reducing admin load, and helping teams act faster on what matters. Learn more at notifytechnology.com. Let's shift from model labs to enterprise software, because Salesforce made a move this week that's more important than it might look at first glance. On the 31st of March, it announced more than 30 new AI capabilities for Slackbot. That turned Slack's built-in assistant from a basic helper into what Salesforce is calling a personal agent for work. The practical bit is that Slackbot can now take meeting notes across different video platforms, act as a desktop agent outside Slack itself, and connect through MCP, the Model Context Protocol, to more than 2,600 apps and services. Salesforce says the rollout starts with Business Plus and Enterprise Plus customers now, with lighter access for free and Pro users in April. The choice of MCP is the real story, because this is Salesforce admitting the old value of Slack isn't enough anymore. Chat is cheap, coordination is valuable. If Slack becomes the layer where agents actually trigger work across the company, Salesforce has a defense against becoming background plumbing in its own customer's stack. Instead of building endless one-off connectors, Salesforce is betting on the standard that's spreading fastest across agent tooling. If a tool is MCP compatible, Slackbot can potentially use it without Salesforce having to build a bespoke bridge every time. According to Salesforce's briefing, there have already been more than 97 million MCP installs globally, which helps explain why this standard matters right now. Research from VentureBeat and Salesforce's own briefing suggests this isn't just Slack improving Slackbot. It's Slack trying to become the work graph that beats Microsoft 365 as the place agents coordinate tasks. That matters because if Slack becomes the layer where agents coordinate work, Salesforce stays central to the stack. And that same pressure is exactly what Microsoft is responding to next. And that brings us neatly to Microsoft, because it spent the same week building a very obvious hedge. On the 2nd of April, Microsoft launched 3 new foundation models under its own MAI brand, a transcription model, a voice model, and an image model. They're available in Microsoft Foundry and the MAI Playground. So, Microsoft isn't just reselling other people's models anymore. The obvious reading is also the correct one. Microsoft is reducing its dependency on OpenAI in the parts of the stack where it now feels it can compete directly. That doesn't mean the partnership is over, far from it. But it does mean Microsoft wants native options on Azure that don't require routing every useful workload through OpenAI's margin structure. For customers, that's actually pretty sensible. Lower cost, tighter Microsoft integration, simpler billing, and a bit less strategic anxiety if the Microsoft OpenAI relationship gets bumpier over time. As the briefing puts it, these launches were widely read as a direct challenge to the voice, transcription, and image APIs that Microsoft also resells through Azure OpenAI Service. Right, let's rattle through a few more before we wrap up. Google officially released Gemma 4 under Apache 2.0 on the 2nd of April, and honestly, that license change may matter more than the benchmarks. Google says the 31B dense model is now the number 3 open model on the Arena AI text leaderboard, which is enough to make people pay attention. But the real unlock is that enterprises can now deploy, fine-tune, and redistribute it without the legal friction that came with Google's earlier terms. That puts Gemma into a very different conversation. OpenAI also bought TBPN, the daily tech talk show, for a price reportedly in the low hundreds of millions. It's the first time a frontier lab has bought a media asset, which is a slightly odd sentence to have to say out loud. OpenAI says editorial independence is protected, maybe, but even if that holds, the move tells you the company now sees narrative control as strategic infrastructure. In California, Gavin Newsom signed Executive Order N526 on the 30th of March. It sets new procurement rules for AI vendors, asks for disclosures around bias, illegal content and exploitation risks, and gives California room to override federal supply chain designations if it thinks they're improper. In plain English, California is telling Washington it doesn't get the last word on which AI companies are safe to buy from. And then there's the money. Crunchbase says global venture funding hit about $300 billion in Q1, and roughly 80% of it went into AI. More specifically, Crunchbase put AI funding at about $242 billion, with OpenAI, Anthropic, xAI, and Waymo alone accounting for $188 billion, or about 65% of the whole quarter. So, capital is piling into a handful of giant bets. Last one. The AI productivity story keeps getting less tidy. Research from BCG, UC Berkeley, and Microsoft's own work trend data all point in the same direction. AI is making people more productive, but not necessarily less busy. BCG's phrase was AI brain fry, and that feels about right. If your team is using 3 or 4 AI tools at once, the supervision load can start eating the benefit. So yes, the bots may save time. The organization will often find a way to spend it immediately. That's all for this week's AI Roundup. If you found value in this breakdown, please leave a rating and hit subscribe. See you next week.